Alright, guys, let me know if I am audible or not. Let me know in the chat box. Audible, alright. Volatile October. So, how is October going for all of you? We can discuss some stocks in which you guys might have taken losses as well. So, if you have any doubts regarding your losses or anything which you think you could have done better but you're unable to figure that out, any sort of technical insight, we'll discuss all that. Because I don't think since the time we've been doing this consistently, I don't think we have discussed about, we haven't had a down phase in the market really. Nothing like nothing like this since a long time. Maybe some of it during early September, but that was about it in the previous 6 months. So use this as a learning opportunity. Use this as a way to prepare for bad markets, because this is, if you plan to do this for the long term, if you plan to keep at this for the longer time, you'll have to deal with this almost every single quarter. Not asking. Also share the link with people who you think might benefit. All those all the basic YouTube stuff. We will start in like 30 seconds. All right, let's begin with the doubts then. You can ask your questions in the live chat. You can put up uh, names of stocks or indices or whatever doubts you have, technical doubts. We'll wait for more people to join in. Right. So, just wanted to know how to identify Swan Energy and how to identify similar stocks. You cannot pick up. Say you watching the market for one day, watching it for days. Really know what's going in the depths of the market. All right. What is going on in broader market names, right? So, so first of all, you should be watching stocks pretty regularly. All right. So when you do that, and when you see that the market is falling, you will see that certain names are not falling. One second. Give me 1 second. Yeah, should be audible now, right? Okay. So sound issue. Is the sound okay now? Sound should be okay now. Let me know if the sound is, yeah, sound should be okay now. So yeah, don't worry, I get notified when the sound goes. So yeah, you want to see the stocks that are not falling. So if I give you some examples, um, let's talk about some examples. So Swan Energy is still moving up. I have exited it long back. So see something like this. This wasn't breaking these demand zones, all right? This was your previous demand, the last demand basically. And this zone wasn't broken. All right. Yesterday it reacted pretty well and now it's breaking out. So if you want to take chances when the index is falling, these are the stocks where you want to do it. All right. If the index ends up turning around and simply heading up, these are the stocks which are going to do amazingly well. Right. So see this one as well did not fall a lot, still going up. This is, I think it announced its results today. So avoid earning stocks at all costs. But look at something like this. This is also going well here. All right. Uh, Again, uh, a reminder that I'm not suggesting you guys to buy these stocks now. So don't do that. I'm sure you guys are smart enough to not basically start buying these stocks even after they've gone up. Right? I can trust you guys with much much common sense. So you could have bought these stocks around these demand zones, and you see they were also breaking through the 1 hour supply uh, early on today, right? So these are the stocks which have basically done well and have come back to the highs. So obviously, if you are new here, it won't be that clear for you. You might have to go back, watch a few lives, watch a few videos, uh, gather some concepts, and then maybe things might get clear. Right? Look at this stock. This was also strong, pretty strong. Now it's reacting pretty well from the 50 DMA. And use the 50 DMA again. If you're new here, you might not know about it, but people who have been watching for a long time, I'm sure they know the significance of the 50 DMA by now. Again, people who have joined recently, make sure that you like the video. So so look at these stocks as well. They're not falling. Obviously, they are extended now. This is not a place where you want to buy the stock, but uh, but you want to look at stocks which have not fallen basically. So best stock buy for we don't do that here. We don't recommend stocks. This is not a recommendation live. So you're in the wrong channel if you expect me to recommend. Can we trade in this market because everything is falling? Yeah. So everything was falling. Everything is not falling. It was falling. And see, the point is, so when did I stop buying stocks? When did I start exiting my stocks? This candle right here, this candle which is marked right here. So I'll show you I'll show you the chart which I've posted on my site. I will open up that chart here. I'll tell you the process behind because it looks easy in hindsight. So you guys won't get it just by looking at the hindsight. You would have to look at how the structure was developing when it was happening live. All right. So this was the chart when I stopped buying. So what is going on here? If you see, this was your previous base. I cannot mark anything here, so hopefully it is visible. I'll just zoom in. So this is the hourly chart, and on the daily chart, if you see, it was around the highs. It was trying to break through into new highs. All right, I'll just remove. So it tried to break out into new highs. Bank Nifty was already weak, so there were already weak pockets in the market, and this index was kind of stronger. So what happens is I was looking at this area of demand, this demand. So one thing is, if it breaks this demand, what is the immediate stop? Like a very logical stop. It's basically this demand, all right? And if this goes, then it's probably somewhere around these lows, right? And if these lows go, then it's probably this previous area of demand, which is in fact the previous weekly demand as well. Right? There is a weekly up move here. So what was my logic for basically exiting. If you see this demand right here, this base which is the daily demand, this is the hourly base. So it tested this base on this candle right here, right? This is the candle where the base was tested, and it started to go up. It started to go up into these areas of supply. All right. So obviously nothing here. I wasn't exiting the stocks right here. But what happens after that? It starts to drop. It starts to drop into that area of demand again. And then there's a reaction again. So this drop, this second drop into the demand is where I basically started to exit my stocks. Next day, what happens? It gaps up into this area of supply, this right here, right? And still pushes lower. If it's gapping up from the demand, immediate supply shouldn't just come into the market, right? It shouldn't start basically falling immediately, right? But what it did, it came down in the first hour itself, and this is where I was expecting the market to be basically done. This candle. So basically it was the starting point of this big candle, which by the day end it got way worse. Right. So if it's continuously pushing through a demand zone, the last demand zone, not just any demand zone, the last one, and there's a lot of space below it. All right, this is the previous base, so the base low is right here. So this fall is guaranteed. All right, you can take my word for it. It will happen every single time. I can show you several examples. So so let's take an example. So if you see, look at this example right here. This is my last demand, right? Or maybe even above that. There is a tiny zone of demand right here. First test, breaks through, goes up to the supply, rejects again. What is the immediate move? All these spaces, the immediate space towards the next base, this is going to be filled. So don't take the risk of expecting a random bounce, especially in the small cap index. Small cap index does not do that, right? It will come straight down in one single day. All right. After that, obviously, whatever happens is the right hand side of the base. So this is the pullback part. This is where the index is pulling back, and this is where it's getting reaccumulated. So if I write it down, just for your reference, this is the pullback into demand, right? This part, and this is where it's basically reaccumulating. Right? So basically, institutions are probably buying again here, and when the move starts again, starts to go back up. All right, so don't expect it to uh, hold back if it starts to push lower. And obviously, and another example of a fall is when it falls straight from a high. So if in you see in this area right here, it dropped straight down because the demand zones, when the index is so extended, when it is so far above the EMA, these demand zones are very weak. All right, you cannot expect it to continuously stay away from the EMA. All right, look at all this move. After a big climax move, expect an immediate drop, and then it starts to basically go sideways. Now, okay, the demand zone is breaking, right? But it's not like it's bearish. It's not like the index was breaking the 50 EMA, all right? It was still extended. So why would I be so careful here? The problem is the mid cap index, right? Mid cap index was way weaker, and I'll show you another indices as well. Mid cap index was way weaker. Mid cap index was unable to take out this supply, and this was already below the demand. It was already pushing through the range low when the small cap index was pushing from the highest demand. So try to understand the difference. So look at this. Small cap index is pushing from the highest demand, but the mid cap index at the same time, it is pushing into the range low, right? And there is a ton of space left here. The previous bigger base is somewhere here. So if this went, again there was a risk of a quick move. Now, okay, this is there as well, but this is not the weakest index. So what is the weakest index here? The weakest index was Bank Nifty. All right, so if you see, Bank Nifty was already pushing below a multi-month base, which was this one. So this one is a multi-month base right here. This is the first base, moves up, pulls back, second base, same at the same price, and then it starts to get weak here. All right, so now third time at the same base, not much hope for the index, and then it starts to push lower. All right, so multiple indices being bearish together, this is bound to happen. So hopefully it's clear how you can time a big fall. It's very easy to time a big fall. You guys are, uh, you guys might get scared of it when it happens in real time, but it is actually very easy to time a big fall. You can do it almost every single time. All right, so the new guys who have joined in, make sure that you like the video as well. I will take your questions. Uh, I'll take a question soon. Let's talk about the index now. What is going on now? So what is the plan now? So Bank Nifty, if you see, it has broken one weekly demand, so it is definitely on the downside, trending on the downside. It has broken one weekly demand. So this weekly demand is gone, but this is another demand right here, right? This candle, if you see the lows right here, big impulse move. This is a very solid demand, and it is also at the weekly EMA. So it is also at the weekly 50 EMA, which is a very, very solid point for an uptrend. For a long-term uptrend, if you see, look at this 4-year uptrend. It never breaks the weekly EMA when it's in a long-term uptrend, right? So look at this entire uptrend as well. Look at this entire part as well. There might be some hiccups. Obviously, it can happen, but weekly EMA is usually a very solid support for the trend to continue on the upside, right? So let's see how it does in the coming days. I wouldn't expect it to go much lower. If it does start to go lower, then it's actually scary because there's a lot of space. Right? So if it does start to go lower below this, it can basically swallow up the entire uptrend. All right. So be a bit careful here, but this bounce is expected. Let's see how it settles around. Let's see how it does around these hourly bases right here. That'll make things much more clear. All right, let's look at your doubts. The time to buy delivery Suzlon. Okay, I cannot recommend individual. I cannot answer these kind of questions. Um, Focus on the concepts which I'm discussing. It will help you immensely. Gold MCX. Okay, MCX gold. Are you talking about the MCX stock or the MCX gold on MCX? Gold, obviously, gold is bullish. We talked about gold. We talked about the monthly demand on gold right here. And it was somewhere in the middle of this up move. Very solid up move from there. I am expecting gold to keep going up. There is nothing wrong with gold. Exceptional chart, monthly. MCX. Okay, again, guys, this is not any recommendation. I don't give any tips. Trade at your own risk. And I can assure you at least one thing, that whatever I teach you is safer than what you will learn anything. What you will learn outside, right? Whatever is there on YouTube, it's much safer than that. You will end up taking good entries in. But yeah, do your own due diligence. I'm not recommending anything. All right. So MCX has gone way up. Don't buy this. Gone way up. Don't buy this. Use a 50 DMA. If it's far from the 50 DMA, it is gone. Even if it's not falling, it is done. All right. Use the 50 DMA. Maruti. Not looked at Maruti since. Okay, actually a very decent chart, but let it pull back. Let it pull back. Demand in Maruti is actually on this level, right? you can look for your setups around this level, not here. What is my entry price? How to know which supply zone is strong? You don't have to know that. So there is no need to know what zone is strong. You only want to use the zone which made the last move. So let's say let's take let's take Maruti for let's take this chart. All right, let's say we are right here. All right. So what is the last supply? What is the last high here? This was the last high. Ignore this last candle. Let's just back. Okay, so the last candle on this chart was this high was the last high on the chart, and and this was the base. This was the demand zone which made that high. So I am only concerned with this demand, nothing else. All these demand zones, they don't matter to me. If it breaks down, it might stop here, but again, when it breaks down, it is bearish now. So demand zones don't matter anyway after it's bearish. All right, if that makes sense. If it falls, it is already bearish. So demand zones don't matter after that. Right? So this is the demand which matters. If this breaks, stock might go up, obviously because it's going up. If this breaks, I don't care what happens at any other demand zone because now it's bearish. So let's say there is a breakdown here. Let's say there is a big breakdown here. What is the supply for this breakdown? Probably somewhere here. So now only this supply matters after the breakdown. Now I will try to short the stock at this supply. If this supply also breaks, it's bullish again. So this is how you keep chasing price. All right. So don't worry about the strength and weakness of a demand supply zone. You will end up wasting a lot of time on that. All right. What was my entry in Swan Energy? Swan Energy, my entry was right here, 313. I'll show you what was it. If you see very carefully, it went up to the previous hourly supply from the daily demand. So there was your daily demand right here. This is your daily demand. Made this high, went into the daily demand, and yesterday recovered very well. And it was sustaining above the hourly supply. So my entry was somewhere around 313. That was my entry. So this trade is over now. Let's remove it for good. Minimum rupees for starting swing trading. You can do it with, see, it depends on what your goal is, right? I cannot give an objective number. If your goal is to make 2 lakhs every month, then obviously uh, you cannot start with 50,000 rupees, right? So it depends on what your goal is. But I would say don't expect more than 30-40% or 50% returns in a year. In a good year, you can, in a good bull market year, maybe if you are trading well enough, you might be able to make 50, 60, 70% if the market is going straight up. But over time, it will come down. You won't make a lot. See, the point of swing trading is to build up the gap from the index. So let's say index is going up here all the time. I am buying stocks, portfolio is going up in size. Portfolio is going up in size. Now index starts to fall here. I take some losses, maybe portfolio comes down a bit, maybe 5% from the highs, right? Uh, Now I can avoid this fall. I can avoid this fall very easily, right? Just a simple EMA, just a simple daily EMA. Look at this. It will let you avoid most big falls. If I can avoid this fall, so let's say index went up 100% and I made 100%, right? Buying different stocks. You might make much more than that. Depends on how good you are, right? So now I'm down 5% from the highs, so I am at 95%. Now index is down 28% from the high. So index is now how much? 70% from this low, right? Or maybe anywhere from wherever you're counting it. So now look at the gap which I've built. All right. Now when the stocks are at down 30%, so let's say some stock was 100 rupees, now it's down to 60 rupees. So look at what actually happens here. So for the stock to go back to 100, let's say it's at 50 rupees now, all right, after the big fall. So the stock to go back to 100, it has to go 2x. It has to double up. The move back up is not 50%. All right. So the move back up is not 50%, it is 100%. So now when the index goes up, and now if I start to buy the stocks after the index gets in a bullish move, now this 95% I will build up on that. So maybe I get a 2x move. So this will become 190%, but this will only become 140. So in the up move also the gap got built up basically. Hopefully this is clear what I'm trying to say. So the point is to gradually and over time avoid the falls, avoid bear markets. Very easy to do that. Just use your 50 DMA. Just 50 daily moving average is it. Look at all the big moves. They happen below the 50 daily moving average. Look at this fall. Look at this fall. Look at this fall. This as well. All of this. Everything is happening below the. Look at this entire bear market. The problem with you guys is you cannot stay put. All right. You cannot. This is a long time. This is probably like 4 months. All right. So from February to how much? July, August. This is 6 months. So will you be able to stay without wanting to buy stocks for 6 months? I don't think so. I don't think a lot of you can do that. I don't think most of you can do that. Right? This is the problem with most retail participants. They are not willing to sit out when it really matters. Right? So if it's see, look at how clear this is. This is your fall. This is the supply. Why do you want to buy here? You know very well what can happen next. So you have to develop the power to sit out. You can if you can sit out for 6 months, maybe buy something here and then sit out for the next fall again. Look at how much you avoided from below the EMA. Let's say this is where you exit, not even from the highs. All right, I would probably exit around the highs itself, but let's say you are just waiting for the EMA to break. So here, and you stay down till here, 37% gone, right? And stocks have gone much more than that during that time. Now the recovery from this level, look at the range which has happened for the next 1 year. You can buy up here, you can buy here, you can buy here, maybe try something here, maybe even try longs here and then exit when it's breaking down again. So the point is to exit when you have to and stay out. If you keep jumping in, the market has fallen a lot. The market has fallen for 3 days. It might not fall for another 6 months. It will do exactly what you expect it to not do. So just stay out. Wait for a nice candle to form. So why did I buy Swan Energy? I bought it after all the up move had already happened. Right. So I bought it on the way up. And also because everything had come down to a weekly demand. All right. I did not buy it during this fall. I did not buy it here. I did not buy it here. I was waiting for the weekly demand to buy it. Right. So and that is also just one stock. I haven't bought anything other than Swan Energy. Right. Because I don't want to risk it. So just one stock to catch maybe a pullback from the weekly demand. All right. So which has happened in Banknifty as well, as you can see, and in Nifty also. Nifty big base here. I've already posted on the server about this. I will. Okay, so it's in text, so I cannot pull it up. So big base, big weekly base, which also broke the previous all-time high. So this is a very strong reaction zone. This is why I bought stocks. I bought this Swan Energy. not even stocks. All right, so you have to sit out. You cannot afford to keep trying, right? Just sit out, wait patiently. You will get extremely good stocks, right? All right, so that was a long rant. Let's look at some more questions. What do you look for when you enter a swing trade? Again, that's a very open-ended question. You might have to watch a lot of videos to get your answer. But I'm sure if you invest your time on the channel, you will get your answer. Share India is extended, so it had the results yesterday. That is why it gapped up. I was also watching this. It is extended now. Look at the previous base. It's right here, and it's here. So it's a good 10-15% from the previous base. So avoid the stock. Can you speak in Hindi? You can ask in Hindi. I'll answer your doubts in Hindi, but I cannot just do the entire video in Hindi. And there are people from everywhere who don't understand Hindi. So if you ask your doubts in Hindi, I'll answer them in Hindi. No problem. Okay, so volt amp. So look at where the last supply in this stock is. So this is your down move. This is the last supply right here. If you're not aware about supply zones, also people who have joined recently, make sure that you like the video as well. So if you're not aware about supply zones and you're just looking at this up move, you will end up buying right at the supply very far from the demand, which might not work out. So it can pull back, maybe settle out here, and then maybe you can look for a buy trade. But avoid this now. Right now, don't buy this. All right, Hari Om pipes. At Hari Om pipes. Right, this looks strong. This is definitely strong. This is a good chart. Good chart. Demand is also right here. So this is your area of supply. This is your area of demand, and this is actually strong because it did not fall the last 2 days at all. So great chart. How do you say that big fall can be caught each and every time? Just use the 50 DMA on the daily chart, right? Just use it on the daily chart. Look at all the big drops. Don't worry about catching a fall from the highs, right? You will get that with enough experience. When you're able to look at hourly demand and supply zones. But just use your 50 DMA as of now. Look at all the big moves that happen below the DMA. Right? Look at all these big. All right. Endurance technologies. Right. Okay, this is extremely illiquid. I cannot recommend it, and I think you should stay away from it. Uh, so, so reverse recommendation here. Even if the chart looks good, don't buy this. Look at how it moves. Look at the volume spikes. So not much trading is going on here, right? Look at how range bound it is. Even when it moves, look at how it moves. All candles are overlapping. There is no clean move. Avoid this. Avoid these illiquid names. And the chart is also not that good. Rolex rings also I talked about in the last session. So, and honestly, now there is nothing. You should have exited if you're holding this. This candle should be your exit right here. All right. So you are buying here. Your exit is here, and should exit. Don't hesitate in exiting your stocks. So I'll tell you what happens. Let's talk about this as well. So let's take Mankind Pharma because I think a lot of you guys were holding. Actually, let's just so let's take Mankind Pharma. So you're buying here already. You're buying here, goes up till the supply comes back down. And now this happens with the market. This comes down to this area of demand. Big candle, market also breaks down, obviously. You don't exit your stock here. Now there is some strong downside momentum in the market. What happens if the market gaps down tomorrow and goes another 5%? If you're not exiting stocks on the market breakdown and the market continues to break down, on the next day it will fall even more because this is the start of the fall. On the next day, the panic selling will actually come in. All right. So the next day after the fall is actually where the panic selling comes in. All right. So if your stock is breaking down, exit it. Don't take that chance. Trust me, you can make all of it back in one single trade. You wouldn't have to work too hard to make what you lose when the stocks are breaking down for the first time. So exit when you get your exit. Exit it very, very quickly. Tips Industries, right? Pretty good. That's a good chart, but it's kind of extended. It's kind of far from the demand now, right? So kind of far. Actually, very far. 7%. Oh, 11%. 10%. So your stop loss is like 10%. I think you can find better. My problem is that I'm not able to enter the stock at the right time. So if that is your problem, it means you're not confident about your stock going up. So you're not able to enter at the right time, and you're watching the stock. It means that you're not confident with your setup. You are waiting for more confirmation every single time. So work on it. Do some back testing. Do some heavy back testing. All right. Put time into it. It is only confidence. If you know that the stocks which you're watching are going up, then you are not confident about it. You are worried about losing money. And if you're worrying about losing money, actually don't buy it at all because if you're worrying about losing money, you will obviously lose money sometimes. And when it actually goes below your stop, you probably won't exit if you're worried about losses. So that is even worse than missing out on a stock. That is actually way worse than missing out on a stock. If the index falls 15%, 20%, there are some stocks which will never come back up. And forget about the opportunity cost which you lose around the lows. You lose at this. So so start trading with a smaller size, start booking losses. Ace looks strong, yeah, but I think it's a V-shaped recovery. So wait for a pullback maybe. It's too far gone. It's at the supply now. Another uh, another misconception in the broader market with stocks is a lot of things look strong after they go up. So just because it is broken out doesn't mean it will continue to break out. That is not strength. That was strength. That does not say anything about what's going to happen next. All right. All right. Recall. This is also a very decent chart. Wait for some stocks to go sideways. These are decent charts. Don't buy in close to the supply and far from the demand. That is all I would tell you guys. Persistent is extended. Persistent is extended. It has broken out. So this was strong. Now it is breaking out. Obviously, no surprises. But now it's gone. Don't buy it. You have missed it. You missed it when it was strong. All right, Aster DM. Okay, avoid this. Avoid this. I have told you guys to avoid stocks which fall straight down. Avoid it. All right. SML. Okay, yeah. So I'm watching this, but it has gone up. It has gone up. It just broke out in the last 1 hour. Don't do anything now. It's already gone. Escorts Kubota, right? Pretty decent, but again, I am skeptical of this fall right here. Wait for it to test out the supply and then maybe a sideways range or something. Rainbow children, right? All right, it was strong, but now it's extended. Look at the demand. Demand is at this level. It is a good 15% up from the demand. Okay, sorry, 6%. It's 1 1, yeah. 6%. 5 6%. Avoid it now. And this is a slow mover, I think. This does not move a lot. Uh, by slow mover I mean the volatility is less. So so a similar sized candle on any other stock relative to the other candles might be 2 3% more the magnitude of the move. All right, Arrow Lamb. Okay, I think it's illiquid. I think this stock is illiquid. Don't buy these stocks, guys. Look at how much time it's wasting. You can find much better, fast moving, very liquid stocks. Don't waste your time in these names. Look at this. Ratna Money, Ratna Money Metals. Pretty good. This has been a strong name since a long time. The last time I bought it was over here. Pretty good. So this is where I traded it last. Still strong, still good. Far from the demand, obviously, because the market has recovered in a one way move. But obviously something you can watch out for. Recent chart. L&T Finance. All right, pretty strong stock actually. Time now. But don't buy this again. See, look at the difference. So whenever you're looking at a chart, right? Let's talk about this as well. Whenever you're looking at a chart, look at the high and look at the low of the range, and look at where you are buying it. If it's closer to the high than it is to the lows, it means you are far from the demand and you are closer to the supply. So this is where it can test out the demand again. So don't buy this. All right. See, so if you compare this block of trading activity right here with this block of trading activity, look at it. Pretty much the same thing. Fall from the high, goes back up, looks strong here. Looks exceptionally strong here. No one would disagree. What happens after that? Comes back to demand, and from the demand zone, starts to go back up again. So this is a live example of what I've been talking about. All right. So to avoid this basic error, you will be kicked out of good trades, and it will have a big impact when it's added up over time. All right. Decent chart, not bad, not bad, not bad. Pretty neat. PICRE, General Insurance. Should we go for a buy if the candle taps on the demand zone, or should we wait for the candle to form? Wait for it to go back above the last hourly supply. So if you see, this is your area of demand. This is your last hourly base. So wait for it to form a base somewhere here. This is the most I can say. Don't simply buy it because it's tapping on the demand. That does not mean anything. When is the new batch? It will start from next week. You can drop a DM on Instagram. I will get back to you. I will get back to you. All right. Pakka Limited. It is extended. This one is extended. So look at how far the ED. Don't chase small caps which are already moving. Right. Very unhealthy. Don't do that. Poddar Pigments. Okay, the stock is actually illiquid again. I cannot talk about a stock that looks like. Wari Renewables. Okay, pretty decent, but it's extended now. So extended now. Maybe wait for a dip and starts to go. Axelia Solutions. I was watching this yesterday. Um, yeah, I actually bought this stock right here. So nothing right now. If you bought somewhere here and you're still holding, might be the reason why you're asking about it. That is a very poor decision, right? Exit when they go below the EMA. Exit when they go below the daily EMA. Get out of it. It will save you tons of money. Entered black box. This morning is a bad trade. Okay, this morning that's a bad trade. Entering here is a bad trade. Don't do that. Don't do. I think some guys in the server, it's in my server, entered yesterday, or maybe watching. Yes, they haven't bought it. They're watching it. But entering at the supply in a weaker market, expecting it to go up just because it's strong, not a good trade. Arman Financials is good. It's decent. Very decent. It is on my watch as well. Very decent chart. Rate gain. Okay, decent. This is also pretty. But all these stocks, if you look at them, they are closer to the supply than they are to the demand. That is my only problem with this kind of risky. All right. Uh, Sangvi movers. So I talked about this in the last live. Specifically talked about, if I remember correctly, because some person or the other keeps asking about. So right. So whatever we talked about probably happened. This is your demand area. Look at what has happened from right. So mark your demand zones properly. That is decent, obviously. Many of you guys have gotten much better over time. Is a good thing. Probably reflecting in your trading as well. This is gone. Don't worry about this. PNB housing. All right. PNB housing, I actually bought it somewhere here at the start of the bull run. But right now, don't buy it. At the supply far from your demand, it can simply make a candle like this. Don't buy this. All right. KPI green. Okay. Last two stocks. KPI green avoided below the EMA. Just straight avoid it. No point. Datamatics Global. Pretty good. Pretty good. It has been good for a long time. It has earnings after earnings on the next week, I think. So avoid this as of earnings. Bought Swan at 315. Excellent, excellent. Nice trade. And that's not because I did that, but that was a pretty good trade. Very solid chart. I actually bought it here as well. I think I've posted about it as well. Bought it here. I was out on the fall. Then I got in. So maybe that is why this was on my watch as well, because I had already taken one trade. So it was already on my bullish. All right. Uh, Sundaram Finance. Last charts. Sundaram Finance. Pretty good. Pretty good. See, again, if you guys remember one time I talked about stocks looking similar when the volatility kicks in. So almost all these stocks look like this. All the strong names are looking like this right now because of the volatile nature of the market right now, right? So, so again, same thing. It is at the supply, demand is right here. I wouldn't buy it right here. Don't buy it right here. It might break out, but don't do that. Don't buy it. So, all right, finance stocks might go up. All right, guys, we will stop here now. Let's save something for the next live, and make sure that you share the videos if they help you, and make sure that you like it as well if you haven't yet. And I will see you guys soon. Have a good weekend.